Silver's still not doing so well. It seems like it because we're at 50, but what's a dollar? If you look at any other ratio of silver in 1979, 1980, where we were back then, silver relative to stocks, silver relative to gold, silver relative to commodities, it was all much, much, much higher back then. We're still about like 82, 83 gold to silver ratio. In terms of just individuals, why would they buy silver? That's just because they can't afford to buy gold anymore because it's too expensive. So instead, they buy silver. Silver is going to spike as it does very quickly. Every time it spikes to the same ratio. It spikes to 15 to 1, gold to silver, because even before we get to gold, if we go back all the way to 1873, what happened in 1873? They call it the crime against silver.
Gold isn't rising because of tradition, fear, or safe haven instincts. It's rising because it is money. Gold market analyst Rafi Farber insists that every credit instrument, every dollar, every treasury bond is nothing more than a promise built on top of gold and silver, and when credit collapses, value flows back into real money. Rafi Farber argues that gold's rise is often misunderstood by mainstream media, which tends to dismiss it as nothing more than a safe haven or inflation hedge. Farber challenges people to conduct a simple thought experiment whenever they hear the word money. Substitute it with gold or silver. According to Farber, Wall Street and mainstream investors simply chase whatever asset is going up without much independent thought. At some point, as confidence in the dollar deteriorates, more people will chase money, itself gold and silver, because they will recognize that dollars are just credit instruments that are steadily losing value. This shift, when it accelerates, is what he describes as hyperinflation. Not prices rising in terms of money, but rather credit collapsing in value against real money. Dollars are still, at their root, a broken promise to pay gold at a fixed rate, a promise that can never realistically be fulfilled. As this reality becomes undeniable, purchasing power will migrate away from paper claims and financial instruments toward those holding physical gold and silver. In such a transition, Farber suggests, wealth consolidates into the hands of those who understood gold's role as money, while those who relied on inflated credit find themselves unable to buy what they once could. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
The main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects. And that's why it's described as an inflation hedge, because it's just money that isn't inflated. And I would challenge the viewers of this show, and your viewers generally, and my viewers and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, or sorry, that you could use the word money, instead of saying the word money in any sentence that you say or any sentence that you hear said on the media or from your friends, instead of the word money, just instead of the word dollar, sorry, instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. there will not be an exception this time. The only difference this time it's global, and this time it's everything, and this time there are no escapees. I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction, and start spinning in another area. So, do I think that Wall Street will always chase the asset that's going up? Yeah, they seem to do that. That doesn't take much smarts to say, oh well, now go well. Let's do the experiment that I recommended doing at the beginning. Like, instead of saying gold, say money. Instead of saying when people usually say money, say gold. When people usually say gold, say money. So if money is at an all-time high relative to dollars, then should you go after money instead of dollars? Yeah, I mean, it's not gonna. You don't have to be so smart to do that. Uh, and do I think other people will start to chase money also when they realize that dollars are falling? Yeah, I think they will. And that is what hyperinflation is. It's when everybody realizes that they need money because they don't have any, and that the price of everything is falling in terms of money, and the price of everything is rising in terms of credit, in terms of dollars. So everyone will chase money at the same time. And at that point, we should be like, maybe now that everyone wants money, we should maybe buy some stocks. I mean, we haven't gotten there yet, but maybe I'll be the first gold bug or money bug to say, I think gold. I think it's enough gold. I think the whole banking system is now kaput, and let's go after some assets that aren't money now. Maybe I'll be the first one. Maybe I'll be like, among the handful of first ones. I'll leave. I'm not married to being a gold bug or anything. When she said lose confidence, and this is just something that just occurred to me. It's true they lose confidence, but there's not a net loss of confidence, because they lose confidence in something, and that confidence shifts into something else. But it shifts into something that whatever it is that they're losing in is based on. Because let's say they lose confidence in the government, they lose confidence in the debt, they lose confidence in treasuries. That confidence is not lost. It just moves. What does it move into? Because what is a treasury? A treasury is the promise to pay dollars. And what is a dollar? A dollar is a promise to pay gold, for God's sake. That's what it is. It still is. That's what people don't want to understand. They don't want to come to terms with that. It still is right now. Dollars are a promise to pay gold at 42.22, which cannot be fulfilled. So now it is a promise to pay gold at whatever 4,056 or whatever it is. But once everyone wants to take advantage of that promise, it's not going to be fulfillable at that promise either. So the confidence is lost from the treasuries, and it moves into gold. So the purchasing power shifts from treasuries holders and everything that's based on treasuries, which includes stocks, down into the gold and silver holders, which is where the purchasing power sinks into. And then all of a sudden we can buy everything and they can't buy anything.
Rafi Farber connects silver's undervaluation and gold's historic role in crises to a broader monetary shift that he believes is inevitable. Silver, though often overlooked, has a proven track record of reasserting its value whenever credit collapses, historically surging back toward its 15-to-1 ratio with gold. Its affordability makes it accessible for individuals priced out of gold, ensuring it remains a crucial form of real money. At the same time, gold serves as the anchor of wealth preservation, offering stability and opportunity when financial systems unravel. Both metals, in his view, are not speculative bets but essential stores of value that step into their natural monetary roles when credit-based systems falter. This perspective ties directly into Farber's warning about global hyperinflation. Just as silver and gold regain dominance when confidence in credit erodes, he sees a scenario where fiat currencies worldwide decline together, even while central banks maintain the illusion of stability between them. In that environment, exchange rates between dollars, euros, or yen may appear orderly, but their true purchasing power against gold and silver will collapse. For Farber, this means the world is headed toward a moment where paper promises lose credibility And real money gold and silver once again becomes the ultimate measure of value. Let's get back to the interview.
Silver's still not doing so well. It seems like it because we're at 50, but what's a dollar? If you look at any other ratio of silver in 1979, 1980, where we were back then, silver relative to stocks, silver relative to gold, silver relative to commodities, it was all much, much, much higher. Back then, we're still about like 82, 83 gold to silver ratio. In terms of just individuals, why would they buy silver? That's just because they can't afford to buy gold anymore because it's too expensive. So instead, they buy silver. Why I started stacking silver? Two reasons. First of all, I wanted enough to get through any kind of zombie apocalypse. Not literally. I don't think there's going to be zombies. The zombie bat in my background is mostly for illustrations, but if somebody comes behind me, I have a camera because I can see. Right, thank God we're doing this interview right now, so nobody can murder me because I have a zombie bat and I also have a gun at my side. Um, we're at war, so what am I going to do? Uh, anyway, silver is going to spike as it does very quickly. Every time it spikes to the same ratio. It spikes to 15 to 1, gold to silver, because even before we get to gold, right, if we go back all the way to 1873, what happened in 1873? They call it the crime against silver. Why? Because the monetary standard back then, before 1873, was you give the mint, the U.S. Mint, what was the amount of silver? Some fixed amount of silver, and then you would get a certain amount of dollars, and that was the silver standard of a dollar. It's in the Constitution somewhere, some amount of grains of silver. I don't remember what it is, but it was constant, and that was the definition of a dollar. So that gave the monetary demand for silver. People would deposit their silver to the mint, and then they would get dollars that they wanted to spend because dollars would increase liquidity because paper cash, as long as it's honest, is more liquid than silver coins, because if it's damaged, you can give it to the Fed or whoever, and they can give you a replacement bill, and it has 100% of the value, whereas a silver coin that is rubbed off is going to lose its value no matter what, because it loses weight. And there's nothing you can do to stop that. You can do things to mitigate it, but you can't stop it. So honest credit is always better than money. But money is always better than dishonest credit. And the question is, when does money override dishonest credit? When everybody realizes that the credit is dishonest, and then the money goes back to 15 to 1. So eventually you're going to get to 15 to 1. And the two reasons why I bought silver is, one, I want enough silver to get through a zombie apocalypse. Not literally, but some kind of situation where the division of labor is breaking down, and I can spread money into my immediate surroundings to sort of like give a CPR to the monetary system in my immediate surroundings. And the other reason is, any extra silver that I have, I would exchange for gold in 15 to 1, and then figure out what to do with it later. I don't know. That's what scares me, because I don't know. All I know for sure is at the end of this, gold and silver are going to have all the purchasing power that currencies currently have, or currently imagine that they have. The thing is, currencies don't have that purchasing power because everyone looks at all of their investments, and nobody's invested in their own currency. They just call that dry powder or extra cash that they're going to invest eventually. But when everybody looks in their portfolio and they see a certain amount of yen, a certain amount of euros, a certain amount of dollars that their stock portfolio is worth, and they imagine, wow, look at all that potential wealth I could get for that. And that means that I have all these savings, and I can go to sleep tonight knowing that if there's an emergency, I can afford an emergency medical bill, I can afford emergency travel, I can afford this, I can afford that, and therefore I don't have to worry. But the fact that everyone is looking at that number, if everyone's sold at the same time, nobody would get that number. You can only get that number if you're the only one selling, or you're only one of a small group of handful of people selling. Nobody can all get that number. So it's all an imagination. And when that all goes away, the thing is, when that goes away, all the purchasing power that actually exists goes into gold and silver. So you're not denominating in terms of the number of stocks that you have in this company and that company. You're denominating in terms of how many ounces you have. And when all that other stuff goes away, then you really know how much you can exchange for whatever amount of silver you have, whatever amount of gold you have. what this hyperinflation is going to look like, I'm starting to think, and so, because everything's going so fast now, I mean, I can't promise that I'm going to hold on to these thoughts in 2, 3 weeks from now. But from what I think now, I think all the currencies are going to go at the same time. I think they're all going to stay basically within certain exchange windows. Yen will be between 130 and 160 as it's been for decades. Euro and dollar will be between 102 and 140 or whatever it is. And central banks will always try to keep between these exchange rates. But meanwhile, whatever these exchange rates are, the exchange rate between any currency and gold and silver will fall and fall and fall and fall until all the currencies basically fall at the same time in terms of gold and silver. And then banks will be trading currencies for this amount of yen for this amount of dollars, but it won't even matter because whatever amount they are, it's not going to amount to anything anyway.
Gold and silver ultimately stand as the enduring foundations of money, reclaiming their role whenever credit-based systems unravel. While silver offers accessibility and explosive upside through its tendency to correct toward historic ratios, gold secures purchasing power and positions holders to seize opportunities during crisis. In the face of a potential global hyperinflation, paper currencies may continue to trade within familiar ranges, but their underlying value will steadily erode against these metals. As confidence shifts away from fiat promises, wealth will consolidate into tangible money, leaving gold and silver as the final and reliable measure of value. How might individuals best prepare their savings and investments for a scenario where fiat currencies lose purchasing power and gold and silver reemerge as the primary stores of value? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.